Good morning, everyone, and welcome to the European crossover webinar. And we're still seeing a relatively quiet session overall. Let me go on and move into the main pairs overall. And I guess I'm referring specifically here with the euro. We've stayed in such a tight range. We do have the dollar index. It has moved up above that. We've talked about that. The key 97.89 area, and we'll quickly pop over on the daily. So we've managed to go in and get above the 97.80. Now the key is going to be, you got to give it its props. I mean, it's above 97.89, but the key, as I've mentioned before, it's a weekly level. So can we stay above 97.89 till the end of the week? We just may. I mean, we'll have to see. Obviously, the euro has its own big impact because, as I've noted before many times, the euro comprises 56.4% of the cash dollar index. So once again, it's certainly going to make a big difference as to how the euro trades. I mean, we're obviously on the lower end, and we're not seeing much of a bump in the movement up. So potentially we could just kind of sit there. But once again, it's going to be important for us to close above 97.89 by the end of the week to go in and signal a bigger push. The cable continues to move lower. Our talked to him before. We thought that at the beginning of the week, bear with me, that we'd be heading back down here to 29.89 on a way to potentially down to 28.98. You know me, I'm a big person about what I like to call the pivots. We talked about right now, 97.89 with the cash dollar index. And the cable, boy, this pivot 29.80 has been around since Moses crossed the desert. So once again, like I said, we're going in that direction, and I think that potentially we can get down here to 28.98. Since the bears have control of this market, we talked about this on the weekly and how we'd failed twice at the 30.80 area. Last week we'd actually been all the way up and looked like they were going to do it. We'd been up here at 31.66, and if you remember when we did the analysis on Friday, as soon as we did the UK data came out, they got above 31.66, and quickly they were down 30 pips. And from there, it's been, just going south of the border. So there we go. Taking over a look at the, the analysis, I meant to say the economic data, you can see it's quiet here today as far as news, with the exception as we move into the States, we will go and get durable goods, as well as Case-Shiller, home sales, and also consumer confidence, Richmond Fed, and also Dallas Fed Services Index. So we kind of get a little bit busy as we come into the States, but you can see here that it's been quite quiet for here as far as economic data. Obviously, for good reason, we don't have anything here in European trading that I see here. Just once again, like I said, as we come to the States, durable goods, Case-Shiller is going to be at, durable goods obviously at 8:30 Eastern, Case-Shiller at 9 a.m. Eastern, consumer, as well as consumer confidence, and then Richmond Fed. And then Dallas Services comes out at 10:30 Eastern. We did have Dallas Fed manufacturing yesterday at 10:30 Eastern, so they go back and forth one after the other on consecutive days. With that, as I said, it's relatively quiet. We shall go on and grab some news and move on. Bear with me. So Australia and New Zealand dollars take collateral damage from China versus risks. The Australian dollar was pinned near 3-month lows on Tuesday as the markets struggled to assess the potential economic damage that could come from China's coronavirus outbreak. The Aussie was huddled at 67.60, having slid almost 1% on Monday when the local market was shut for a holiday. There is some chart support around 67.55, a trough from last November, and more at 67.25. The New Zealand dollar was also down at 65.47. Both countries have extensive trade ties with China, with tourism and education, especially vulnerable to disruption from the virus. Australia welcomes around 1.4 million visitors from China every year, the largest source of tourists. Adding the pressure was the risk of weaker Chinese demand for commodities, which had already undermined prices for oil and iron ore. Investors also use the Aussie as a liquid proxy for the yuan, particularly as mainland markets are closed until at least February the 2nd. What is bad for the Chinese economy is bad for the Australian economy, said Joseph Carpuso, ForexAnalytix analyst at CBA. The oil was almost 3 U.S. cents so far for the month, or has lost almost that much. The obvious question is, how far can it fall? And the answer largely depends on the spread of concerns about the virus, the low point in 2019. The virus adds another challenge to an economy already singed by massive bushfires and lingering smoke pollution, a headache for the RBA ahead of its first policy meeting of the year next week. Markets are leaning against another cut in interest rates after the data out last week showed unemployment fell for a second month in December. Futures implied 20% chance of an easing of the three-quarter cash rate on February the 4th. The odds could change again depending on what inflation figures for the December quarter show on Wednesday. The median forecast are for 0.6% increase in the CPI, which could take the annual pace to 1.7%. A soft outcome could revive the risk of February easing, while a higher number would likely see the market price out almost any chance of a near-term move. And it mentioned that the inflation data, and actually as we roll into the next day, we will get that. You can see here Australian CPI data, which will be coming out. Depending on the way you look at it, obviously it rolls into the new day for me. For those of us in the States, it's in the same day, but it's just in the evening. But for the Aussie CPI data that would be out, which would be out at 7:30 Eastern PM for those of us here in the States. And dollar purchase at 8-week highs versus virus fears linger and Fed eyed. The dollar held at 8-week high against its rivals on Tuesday as investors focused on the economic fallout from new coronavirus in China, though broader market sentiment stabilized with the Chinese yuan and Australian dollar off early lows. Global stocks and oil prices have tumbled in recent days on fears that the virus could do further damage to China's already weakened economy, an engine of global growth. Currency markets were subdued in early London trading as a two-day Federal Reserve meeting kicks off later on Tuesday. The market's already taken a step back from sell-off earlier due to the virus concerns, though the dollar is unlikely to weaken substantially as there is safe haven demand for the greenback. Against a basket of its rivals, the dollar index rose 1/10 to 98.801, the highest level since early December, taking its gain so far to 1.7%. The Aussie New Zealand dollar counterparts led losers against the greenback, falling 0.2 and 1% respectively. Investors' attention was firmly focused on the Chinese currency on the onshore market, with mainland markets shut for holidays this week. Strength in the offshore yuan provided some calm to nervous currency markets, even as European stocks were struggling to hold opening gains. Elsewhere, the yen held steady at 8.97 per dollar, close to its strongest level since January the 8th. Japan's currency has risen for the past 5 trading sessions against the greenback due to the growing risk aversion. With that, we'll go and start into the analysis. Okay, let's pull up the euro. So the euro spent Monday's session under pressure in a tight range, holding above 110. Bias chart support remains 992. with resistance at 1058. So there's no change here. You can see here that this was the analysis, or these are the levels since yesterday. Now, we did mention in the chat room, there was on a 2-hour chart support, there was we did have some support at 1008. So looking for support between essentially 1008 to 992, but 992 is this key level right here. Now, the head and shoulders target, if you want to call that, still is in effect, obviously for good reason. I mean, we can't even get a lift. So are we going to go on and take this move down here to 917? As I mentioned for Amanda, I think she's got 897. Obviously, both of them within the same ballpark, essentially a 20 pip range between what we're both looking at. But obviously, it's pretty clear. Now, we're not gaining further momentum, I will say that, because we could have opened the week really starting to press lower. And we're just simply not doing that right now. We did a little bit of a level here, 1020. We're kind of trading on either side. And on a 2H, I've got 1008 coming here on a 2-hour chart. But anywhere between 1008 and 992, maybe we'll see a pause. We're just not seeing anything to demonstrate what would generate that pause at this point. I mean, the euro's trading very quiet. We don't even have any European data to speak of to maybe make a stand or turn around or something. So we shall see, but it's trading very quiet. So the analysis or the levels are going to remain the same there. Looking at the cable, that's trading equally as tight, and there's no changes here to speak of here. It still remains the same. Basically, let's go and pull up the levels here. We did have 3010, so maybe we'll lower that a little bit here. But yesterday's analysis which was from the weekend, looking into this start of the week, which was cable for the second consecutive week experienced an intraday reversal on Friday, following once again to sustain a close, failing once again to sustain a close above the weekly level of 38. This past week was far more disappointing for the bulls, as the bear reached 31.66 before succumbing to a deluge of selling. The key level of focus will be the pivot 29.80. So I already mentioned that earlier, with bears eyeing a run to 28.98 before tapping the brakes. Resistance is 31.08, and that 31.08, I think yesterday that actually was a high, 31.08 or 31.06, something like that. It was up by a pip or two. So you can see where we stand right now. So I guess I could update these because we don't really see any strength come back. And we're already at the 30.10. We're almost there. We may have tagged the 30.10. Let me see. It looks like, yeah, it looks like we just got to the, maybe just a hair bit lower. Bear with me. Yeah, okay. So from yesterday, coming to today, we had the support at 30.10. We've already got down to 30.03. As I mentioned in the analysis, we said the focus would be the 29.80 pivot, although I think we're going to go lower, potentially down to 28.98 with the bears in control. But surprisingly, even yesterday's session was relatively quiet. We expect them to push lower. But we're going to go with 29.80. As I mentioned in the analysis, that was the focus to start the week. And then from there, we could actually push lower. And although we didn't start out the week with a lot of gusto as far as momentum, it's still definitely going the bear's way. And that's why I think that we can get down eventually to 28.98 before the bears tap the brakes. But 29.80 is going to be the pivot, and what I think the focus will be on, where we'll see a bit of a battle there. I don't really expect bulls to be buying, but it just might be a good area where shorts may look to go in and cover on a short-term basis. On the upside, let's take a look. Let's see. It's still a ways away. I guess right there, which is going to be. Yeah, we'll go right there with 30.38. We'll keep it pretty tight. Might almost be a little bit too tight, but we've already come off quite a bit. If we do get some short covering, yeah, we have to be 30.45, 30.45. And we have to change this to bearish. After 2 consecutive weeks, even though we're above the pivot, it's clear that the bears have the momentum. So let's go on and move in now to the Aussie dollar. So the Aussie slipped to new lows, closing into the volume support level of 67.60. Support into Tuesday is 67.08 with resistance at 68.07. So yesterday, one of the things that I was sharing here was right there. Actually, should be a little bit higher, but it's not. We're looking on a 2-hour chart. There's a little volume support zone there between 67.60, 67.70. But that being said, obviously you can see this is where we broke here, and now this is clearly bearish. When I started, I was in the Asian session, and I was doing some the analysis, and we started getting more and more coronavirus, reports coming out. How many have been affected in China? How many died? Some news out of Japan. There was some news, I think, out of Hong Kong. All coronavirus, trying to think, not I won't say specific, but all related, coronavirus related. And then we started seeing the Aussie just continue to slip right on that news. It was already on the lower end where it closed the session, but then it just started weakening and weakening and weakening. So anyway, nonetheless, there was a support level there at I don't know if it's right here on the chart here, but was 67.60 to 67.70. Looked like the market was trying to make a stand there yesterday during trade in the States. But like I said, we closed on the lower end. But once we started to get further coronavirus-related news, then the Aussie just started dipping and dipping. So today, it's going to be 67.08, as noted here in the analysis. And we said resistance at 68.07. Actually, we're going to go on and put the resistance. Remember, I mentioned that zone. I'm going to put it now at 67.70. Actually, at the level there, we'll call, you know what, 67.86. If they do get a rebound, that's where so might be a little bit too tight there. Clearly bearish. the bears have really done their damage now to this market. We'd actually broken out, and then the last bastion of support here was this 67, 68, 48. Remember, we talked about this where it broke out, came back for support, rallied, sold off. That was just retested that, rally, was rather a feeble rally, came back. We actually traded for several days, for 3 straight days, right around that same area, 68, 48. Now, not only did we close lower, we've even broken well below it and broken down here the trend line. This bears are now in full control now at this market. And so the concern now is if the, which was, you saw that in the news, they're only pricing in a 20% chance cut of the RBA, but with the whole coronavirus and bushfires, and it's just really open for this thing to go much slower. We'll see how much slower that can be. At least for now at 67.08. The concern now is that we've broken below this trend line. Anybody who's bullish, technically speaking, you got to throw in the frickin' towel. You know what I mean? That's it. You might find a little bit of support here, and we hold, but look, the only way this market gets bearish is we'd have to get 2 consecutive closes above 69.14. I mean, the only way this market goes bullish, I'm talking about bullish, 2 consecutive closes above 69.14. You know, if you close above 68.48, you would slow down the momentum of the bulls. But to go back to bullish, 2 consecutive closes above 69.14. Other than that, this thing is going to stay bearish. I don't care if it sits at 69 cents for you know, a couple of months. It wouldn't make any difference. You need 2 consecutive closes above 69.14 for bulls to regain control and establish that momentum. Let's go move into the Kiwi. Kiwi paired back in Monday's session to support level 65.44, which is confluence with 65.44, the 38% of the move from 32.01 to 32, from 62.01 to 67.56. The pair's inability to bounce off the dip has turned the momentum lower. Looking out, the key support is going to be the breakout level of 64.93, and you can see that right here. And let me move this out of the way. So you can see now we held up so well here, and it was really, got to give it the credit. It was really hanging in here, and even when they dipped back, but now we've actually gone lower, and you can see right here, this level. Let's go and put this right here. There we go. So that 65, we had this level confluencing also with the 38% back. But you can see now that we've gone below this, that's it. The bears have the momentum now. And the key level is right now. Now, I would say it's still bullish. You got to give it credit. It's still bullish. But bears now have the momentum. And the key level that we're looking at is now the breakout level. You can see that, 64.93. And that's going to be support. We're already at 65.25, so, but 64.93 will be the key level that we're looking at. And support for today. Actually going to be support for a ways. It's going to be key. And resistance at this point would come in right there. 65.91. Now, the bears have control right now, but this is clearly still a bullish market. I mean, all we're doing right now is we've tested the 38%. We're below it right now, but we haven't even closed one day even below it. Obviously, we've closed down here, be the first day below. But we're still bullish. The market's still bullish. You can see it's clearly above the breakout level of 64.93, but it's going to be key for them to go and hold that area. Let's go move into the dollar CAD. So the dollar CAD closed above resistance level of 31.80, opening a potential challenge to 33 even. Immediate resistance is going to be 32.07. Well, we're just right there. We're supported 31.45. But even though we're just right there, 32.07, that is going to be the resistance. That's key right there. We're at 32.07. You can see coming right there. And we'll see what happens, but it's 32.07. We're right there, just about there. So that will be today's resistance. And we will actually go and flip it to bullish now. I had 2 consecutive days above that 31.36, and we did get above here, the close above 31.62. So flip it to bullish on the pullback. It's going to be right there, 31.44. But like I said, we have the potential to move up here to 33 even, 33 cents. I was a bit surprised here when we had this move. This is rather interesting because we had the strong move here, and then we have this gravestone doji. The market sits there, it holds its own, and then we get this, they do some stuff. So think of it this way. You see this, and maybe bears were still saying, well, you never know. I'll hang on. We'll see if they close above 31.80. And the market pulls back down. They're like, oh, you see, we may get that pullback. And bulls might have said, hey, you know what? I'm going to have to wait until we can get a little bit better resolution, which we did yesterday. So that's what I'm saying is we're going to see where we're at now, 32.07. There's some additional resistance. Well, there it is at 32.07 coming in. But this is an area where they could push it a little bit. They may take a little bit of a pause. Once again, like I said, we're going to have to do a little bit more work. I think that had this day been somewhat more positive, then I think potentially we can be still further up and away. Not that we can't, but I'm just saying we may see the market take a pause here. Don't be surprised if we take a pause and we kind of pare back a little bit here, but we shall see. Let's go move into the peso. So the dollar peso had its best close over the last 3 weeks. The pair has the ability to reach 1905. Support will be 1885. Well, we've been talking about that really since early the prior week, that it was holding up down here when it had the potential to move lower as equities kept moving higher, and we just simply wouldn't do it. And so now, I thought we would have had a far better rebound. We did rebound, but we talked about that previously. We thought we could make it a 1905. But we still have the ability to go move higher. It's going to depend on equities if we can pare back any further. For right now, resistance is going to be 1898. So status remains the same. And 1905. And the difference is support will just move up to 1885. But the momentum is going its way, although still remains rather slight. So the dollar yen finished Monday's session just below 109. In light of geopolitical issues coupled with the coronavirus, I would have expected a move to be sub 850. The pair befuddles me in its refusal to stay down. Resistance is going to be 1934 with support at 871. So I would have thought that we would have start out the week, as I mentioned yesterday. I would have thought we would start out the week at 870, push goes sub 850, maybe dip down here to, let's say, even right here, which have got us around actually 806. You see what I'm saying? Maybe that might have been a bit of a stretch there, but at least I would have expected a move to about, around 820-ish. Like open up at 870, move on down. And we opened up around 9 and got to the 870s, moved back up, kind of danced around, went back down a little bit. We didn't even challenge the lows. Even his equities moved back lower. So this thing is, as I said, befuddling that it's been able to hold at this area here. So with that being said, I placed the support at 871. That might be a little bit rich. I think we'll have to move it lower. We're going to go and put it at 856. We had this level here. So we're going to go right there. It's actually 854. Let's go with 854 if we do get some follow through, but I'm not comfortable with this market anymore here because its inability to go lower. Maybe we'll get the dip today if equities break lower. And we are at the lows right now, but heck, we should be a whole lot lower. And my concern is even if you make a dip down there, you probably find a little bit of, some decent short coverage that people are concerned about its inability to break lower. On the upside, we're actually going to stick with this 918. I actually like 934, but we are under some pressure, so any moves back up to likely want to try and fade that. Let's go moving to the cash dollar index. Well, no changes here in the cash dollar index. I was looking for 98.11, which I think that's, from yesterday where the next low would be, and the support at 97.42. You could probably move this a little bit higher as far as the support. That would be key, but we're going to move this area to 97.61. So we'll move it up a little bit higher. Right there. But really no change, and potentially here at 98.11. There's a little bit more resistance at 17, but once again, we'll see how much. This probably coincide with the euro potentially dipping down to about 992. With that, let's go into the cross rates. Well, the Cpi Yen is still pressing lower. We talked about the move lower here. We actually even broke below the 72 cents. We're down here at 71.04. I think we even mentioned that as being a key level. But even then, like I said, we continued to weaken. This is actually a key level in and of itself, once again, right here at 70, what's called 7102. We're actually 7104. So we're going to mark this off as our support here. This is key in the overall bigger picture. Could we dip a little bit lower? Yeah, we actually have gone a little bit below that, but this is important here. The 7102, in light of us breaking the 72, and even breaking below 7147. We're a bit stretched here. On the upside, it's going to be right there. Actually, just a bit right there. Right coming across here. 7127. 7127. If we get two consecutive closes below here, then it throws a whole bull picture in jeopardy now. It's still bullish as long as we hold above this line. That's what I'm saying. The 71 cents, 7104, 7102 is key. And let's go and move into the Euro Yen. Same here. Look at this. We're breaking below the trend line. We're breaking below the most recent support. Certainly looks like we're gaining a little bit more momentum downside. I mean, obviously the dollar yen continues to remain whole, but it's always good to look at these pairs across the spectrum. It's like I said, if you look at dollar yen, how is the euro yen doing? How is the kiwi yen doing? The guppy. So we certainly have the momentum to go and push lower here, and we're starting losing, and more importantly, we're losing key levels of support. So that opens the door where you can get some stop losses from longs. Resistance right now. Let's take a look here. It's going to be right there, 2022. Almost 40 pips away. You can see the support level come across this high and here. You see right there? Comes in at 1971. Let's call it 1970. And we had that from yesterday. Where they can try and shoot for. Let's go and move into the Euro WAD. And as I mentioned, it's more about odd weakness as opposed to euro strength. We have gone and challenged at 63.41. So we have continued to move higher as we goose some stops up here. We're going to use this as resistance, even though we've been higher earlier today. That's going to be resistance 63.41. And we'll go 2-hour chart for support. There's going to be the support 62.90. Let's just call it 62.95. I'm just going to move on to the Euro Kiwi. Well, we have seen a smart little rebound in here. Certainly had the opportunity to break lower, but obviously the weakness in the antipodian currencies, i.e. the Aussie and the Kiwi, have done their own damage. It looked like we would actually be breaking lower here. We bounced up here. Resistance is going to come right there with all these little touches. You see right there? And that's going to be 68.92. It looks like that's about where the market ran out of gas. We got a little bit higher, so it's going to be 68.92. And for now, the momentum has turned bullish. And support right here at 68.04. Just going with the levels right there. And you can see a lot of volume at those areas. So 68.04. And let's go move into the Aussie Yen. Well, we've just about made it to the 50% back of this move from 66.94 to 76.56. Is not 50% back. Hang on one. Oh, from 69.94. Still not, that's not 50% back. Hang on. With just the eyeball test. I'll be doggone, it is. That is right. That is correct. It just doesn't seem a 50% pullback. But yeah, that's it. 73.25. That's going to be our support though. 73.25. Got 73. Got some good volume coming in right across here. You see that? All these touches. 73.70. And just a bit higher right here. Just call it 73.75. Now let's go move into the guppy. We've come right into support here, the support level here, and already starting to trade into a relatively tight range since yesterday. So we're just going with the levels right here, keeping it clean. And that's going to be 41.42. 41.42. Looks like it's moved down there. It's 41.45. Looks like we actually tagged that also. So a little bit of short covering probably be in place or due. Also find a temporary low bottom here in cable itself. Let's go and take a look at resistance. You can see that low come right across. 42, essentially 42.50. We'll go in and draw that in. Right there, you see that? Come right across. So 42.50. And lastly, sterling odd. Well, I thought we were going to make a move here yesterday and challenge these highs. Came up a little bit short. Maybe we'll see it tomorrow. Maybe, I don't know. But sterling in itself is weak, which is 93.84. Let's take a look at the 2-hour chart. We've taken a pause here. Resistance on the short term for today is going to be this 93.47. 93.47. I thought we were going to push higher yesterday. We did not come. I thought this was going to be a great area. They shorted it, and sterling just couldn't pull the deal. So it's going to be 93.47. The support comes in right there. 92.63 if we get a dip. And you can see here, euro continues to remain weak. Sterling kind of cable holding its own in a very tight range. Dollar yen just kind of holding close to these lows. Not really a whole lot. It's a relatively quiet day. Peso has pared back. Once again, we don't get any real economic activity until we come into the States. Well, a lot of times the real action happens in European trading nowadays, and then we see things tail off as we come to the States, and we get that last move. But because there's no economic activity, data, we're going to be waiting until we roll into the States, 8:30 Eastern. So that's where we'll probably should see some stronger movement at that point. As I mentioned, we have durable goods, Case-Shiller home sales, consumer confidence at 10 a.m. Eastern, along with Richmond Fed. And then as we roll into this next day, we have Australian CPI. That's all we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.